Thanks for joining us for the Weekly Forex Outlook at XM.com. Next week will be a fairly quiet one, with the spotlight falling on the US CPI report and the Fed minutes. We'll also get growth data out of the UK and inflation figures from China. I'm Maria Pachordes, and joining me to discuss all this is lead investment analyst Rafi Boyadjian. So Rafi, let's start in the US, where we'll get the minutes of the Fed's September meeting on Wednesday and the Consumer Price Index report on Thursday. There's been a great deal of speculation about whether or not the Fed will hike one more time this year. Do you think this CPI report will provide some clarification as to where the economy is headed? And what reaction are we likely to see in yields and the dollar after the Fed meeting and the data?
Well, Maria, indeed, there's been a lot of discussion about whether or not the Fed will hike one more time this year. What we have to realize is that the Fed, they themselves don't know whether or not they will hike rates because the data has been so mixed lately. On the one hand, we are seeing some signs of a slowdown in the economy, but given where inflation stands, the economy isn't slowing fast enough. So that's one way of looking at it. The other is, of course, inflation itself, although it has come down lately. It has started to, the headline figures at least have started to head higher, whereas the slowdown in the core numbers has been a lot, it's taking longer to get to all the way down to 2%. So what we're expecting to see on Thursday is that perhaps this, latest, upside reversal that we're seeing in the headline prints on the back of the energy price spike, maybe that's starting to level off now, and then we might soon see the headline numbers head lower again. So the headline CPI figure is expected to come in at 3.8%, up 0.1 percentage points from the prior month. And as for the core figure, that's expected to have fallen further in September. So if we do get such numbers, we're probably going to see a positive reaction from the markets because it would pretty much underscore the fact that inflation isn't out of control. We are seeing oil prices pull back now, and of course we are seeing further progress in terms of core inflation coming down. But of course the Fed has yet to give the green light that the job is done in terms of monetary tightening. So that's why on Wednesday, when we get the Fed minutes, we're likely to see more hawkish signals. Now, we've already heard from a number of Fed officials since that last meeting, all of them pretty much keeping the door wide open for one more rate hike. So we're probably not going to see anything too new in the minutes, but nevertheless, investors will try to get a sense of which way opinion is swaying in terms of the extent to which Fed officials stress the downside risk to growth and the extent to which they stress the upside risk to inflation. So potentially the minutes might be positive for the US yields, which are of course now at 16-year highs, and that surge in yields has turbocharged the dollar. We are seeing a slight pullback now, but of course that could all change if both the minutes are hawkish and the day later the CPI report we see any upside surprises.
Moving over to the UK now, the pound has been struggling lately, but what about the UK economy? How do investors view Britain's growth potential at the moment? What are we likely to get from the data coming out on Thursday, including monthly GDP output and production numbers?
Well, the pound really has been struggling lately because, of course, there's been a series of blows for sterling. On the one hand, we've got the resurgent US dollar. We had that unexpected dovish tilt from the Bank of England at its last policy meeting, and the recent PMIs have really raised concerns that the UK may be headed for a recession. Now, of course, that last set of PMIs, we did get an upward revision, at least in the services PMI, which is at least showing that the UK economy isn't doing so badly. On top of that, we did recently get major GDP revisions to to how well the UK economy did during the post-pandemic recovery period. So the UK economy is now thought to have expanded a lot more than previously thought, since during the period of 2020-2021. So all in all, the UK economy isn't doing too badly. But given that inflation in the UK is still so high, there is obviously concerns about stagflation. Now, the Bank of England, yes, they've paused, but at the same time, they are saying they're probably going to keep rates at that level for a considerable period of time. So that's what's kind of worrying investors, the fact that we could be in a prolonged period of stagflation. So in comparison to the US economy, where the base case scenario is a soft landing, obviously the dollar is a lot more attractive than sterling at the moment. In terms of the data, we're probably not going to get anything too concrete in terms of the GDP, monthly GDP readings for August, as well as industrial production and trade. So at most, we're probably going to see a knee-jerk reaction, and quite possibly the overall market sentiment might play a bigger role in terms of driving sterling over the coming week.
And finally, turning to China, we'll get inflation data and trade figures on Friday. Are there any signs of a rebound in China's economy? And what will this mean for risk-sensitive currencies such as the Australian dollar?
Well, we are seeing not so much signs of a rebound in the Chinese economy, but more so signs that perhaps the slowdown is starting to bottom out, and maybe the Chinese economy is poised for faster growth over the coming few quarters. So the data will be important in terms of, first of all, the producer prices we're going to be getting. That's a good indication for Chinese PPI numbers, because they reflect how much demand there is for manufactured goods coming out of Chinese factories. They've been in negative territory lately, but we are seeing that year-on-year decline to have eased to 2.4% in September. But headline CPI, though, in China is still very low. We're only expecting a marginal improvement to 0.2%. As for exports, they're expected to have a decline for the fifth straight month. So still too early to get any concrete signs that the Chinese economy is at a turning point, but any upside surprises in the data could potentially boost the China-sensitive Australian dollar, as well as equity markets, and possibly even crude oil prices as well.
Rafi, thanks so much. This was the Weekly Forex Outlook here at XM.com.